Hey, good afternoon. Today is May 26, 2022. We're looking at a 2000 tick chart for the E-mini S&P 500 futures market. We've got 21 EMA here in blue, 9 EMA here in cyan, and a 200 EMA here in magenta. We have a MACD indicator down here at the bottom, but we primarily use technical analysis, price action, overall market context in order to place our trades. Take a second, real quick, like the video, subscribe to the channel, turn on post notifications so you know exactly when I post this content. As always, I hope that you guys had a phenomenal trading day. I had a really good trading day. I finished 4-0 for today, one of the best days that I've had. And not because today was easy to trade or anything, but because I stuck to my rules, I stayed disciplined, and just because this catching stop strategy has been treating me amazing. I've really seen consistent profits with this strategy, and I'm really happy that I've kind of found that style of trading that fits with me the most. So in today's video, I want to really focus on continuing to train our eyes in being able to spot those trades as they happen. So let's get right into it for today, as we normally do in this channel, marking level of resistance up here at these overnight highs, level of support down here at these overnight lows. I have a few short-term trend lines drawn here, and as the market opens, this is kind of what I had noticed. We had the short-term trend that was moving down with a break above EMA, moving down to a new low, or at least an attempt at a new low. Prices broke this short-term trend right here and formed a double bottom. So prices found a level of support down here as the 200 EMA is coming up. So I was hesitant to go short. I was anticipating prices were going to retest the highs. We have crossover the MACD as prices transfer from more of a bearish to more of a bullish momentum, restarting the count where the double bottom was right here. So prices came up and down for a first entry short, then prices pushed above EMA. 9 EMA is crossing over 21 EMA. Looking down at MACD, we're migrating towards that bullish momentum, waiting for that second entry short to trigger. And as the next bar forms, there's a second entry short that triggers. Now again, we're not looking to go short above the EMA as prices are about to start trending. So what we want to do is catch all the stops for people that are trying to go short. I had my entry order one tick above this signal bar right here, and as prices begin to form, I was in this trade. My stop loss is going one tick below this bar that I entered on. So I have got my safety stop in place. I am in this trade, and prices work up for a scalp. Now additionally, I had a runner in play, but I didn't want to put the runner all the way at the top here just because I was anticipating we were going to get a little bit of resistance off this high right here. So I put my runner kind of in this area right here, and as prices came up, it got my runner for 6 points before doing exactly what I thought it was going to do, and prices were going to chop around for a little bit. Now if I turn on my trade markers here, you'll see exactly where I entered the trade. Again, one tick above this signal bar. In this trade, out for 2 points, and then I carried that runner 6 ticks. So I think I got out at a really good time before prices started to chop around. Prices then push above the level of resistance that we have here at the top. Prices in this channel break, potentially looking for a new high of this uptrend that we have in play. We start getting overlapping bars, consolidation, really hard to trade any of this. And there's that new high we were talking about before prices come back down to test the EMA again. Prices respect the EMA, so we can continue to move up in this uptrend. Now you can see we're getting a second entry short that triggers below this bar, but notice where the swing is. It's marking the swing from right here. Prices come up and down for first entry short, up and down for a second entry short. I was not counting this as a second entry short. I restarted the count here at this swing. So prices came up and down for a first entry short, and as prices came up and down for a second entry short trigger, you would look at entering the market one tick above the signal bar. The issue is look at how stacked these bars are. And also peek down at this MACD. Notice how it's starting to thin out a little bit. I didn't want to trade any of that. So as prices continue to grind their way up, MACD is thinning out. Very hard to take any trades here. You have these moments where prices push up, consolidation. Prices push up, fight a little bit, more consolidation, overlapping bars. Now we get all of these overlapping bars. 9 EMA is starting to flatten out. Very hard to take any trades here. Sure, you're getting a second entry long trigger with the first entry long, second entry long, but very hard to take that with all these overlapping bars. Additionally, MACD is showing bearish momentum, so that's going to keep you out of these aggressive trades in these areas. Now, prices pretty much come down and test this support level of this channel for its third touch, and as prices push back up above EMA, we're anticipating prices are going to go higher. So as prices are coming up here, I have this new low for the swing. Prices come up and down for a first entry short as prices trigger lower for the first time, and if I slide this up a little bit here, prices come up and looking for a second entry short trigger. As this next bar forms, it triggers a second entry short. Notice how 9 EMA and 21 EMA are starting to separate. Prices are starting to trend upwards. You know, the MACD is probably losing a little bit of momentum here. I'd argue this is actually probably a little bit more aggressive as I look back on it. It's actually not as aggressive looking back on it just because prices are continuing to make higher highs and higher lows. So price action predominates. That's actually more of a comfortable trade I'm okay with. but prices come down. We don't get a close at or below the 9 EMA, so we're keeping our entry order in place here. And as prices come back up, you catch all the stops of people that are trying to go short. Their stop losses are one tick above the bar that they tried entering on. So we catch those stops and we ride up the momentum for a scalp. And you can see if you entered at 40.50, prices come up all the way to 42.75. So that's a 9 tick move, at least 2 points before prices reverse. Now, as I slide a little bit here, what we start to notice is prices are coming back down again to test the support level of this channel. You can see this uptrend start to lose steam as prices grind to the EMA here and support level of this channel that's moving up. I wasn't interested in taking a second entry long here. I was anticipating for prices to break back down below the EMA and hold. So you have a new swing high here. Prices come down and up for a first entry long. Prices come back down to the EMA, up for a second entry long before reversing. Now, I was anticipating the 9 EMA crossing over the 21 EMA, so I may have entered a little bit early, and that's why this is an aggressive trade. But I also noticed the MACD was crossing over into more bearish momentum. So my entry order was one tick below this signal bar right here, and as prices came down, I was in this trade, and I put my stop loss one tick above the bar that I entered on right here. As prices come down, prices are respecting the EMA as they move down for a scalp. Now, my runner was stopped out, but at least I got that scalp in play. So prices begin to oscillate around this 21.9 EMA. Very hard to trade any of this, but as soon as we start seeing a separation between 9 and 21 EMA, that's where we can anticipate prices to start trending a little bit and we can start looking to catch stops. Now, what I liked about this entry right here is how small the bar was. This is only 5 ticks, so very low risk trade right here. You're restarting the count of the swing. Prices come up and down for a first entry short, and then prices come up and down for a second entry short if there's a trigger below this bar. Additionally, MACD is showing bullish momentum start to pick up ever so slightly, so it's very low risk. You're catching stops one tick above this signal bar. Prices initially came down to trigger that second entry short before immediately reversing, coming back up. I was in this trade, got a scalp, and had another runner in play. Now again, at the time, prices were moving very slowly, so you really had to watch this grind up. I didn't want to miss out on any of the profits, so I took my stop loss and I was really following prices tightly as they were moving higher until eventually getting stopped out right below this bar. But I capitalized on that move, and that was my fourth and final trade for the day. Now I stayed around just a little bit longer to see prices oscillate back and forth. Again, not wanting to trade any of this, and I was done for the day. I think around this time the ATR was very low too. I think it was like 2.75, and I was like, I'm not going to sit through this. So I didn't take any additional trades, but as you can kind of see, prices do start to trend upwards here as you have that separation between the 9 EMA and 21 EMA. You have a new swing down here as prices come up and down for a first entry short. Prices come up and down. Second entry short triggers. The question is, do you put an entry order in place above this bar? And the answer is no, because as prices come down, if prices close below this 9 EMA, you have to take the trade out. That rule alone has kept me out of some nasty trades. Now in this case, that trade would have worked out, but if I'm sticking to my rules, if I get that close below this 9 EMA while prices are trending upwards, I'm taking that trade out. But I do like the separation between the 9 EMA and 21 EMA continue to hold. And all I did here was I restarted the count where the swing was, the most recent swing, off the support level, close enough to the 21 EMA. Prices came up and down for a first entry short. Then prices came up and down for a second entry short that triggers. You could put your entry order one tick above this signal bar right here. And as prices come up, you'd be in this trade. Your stop loss is going one tick below this signal bar. And as prices come up, you got a scalp and potential runner. Actually, the runner gets stopped out, but at least you get the scalp in there. And now notice what's happening. You have this channel in play as prices are moving in this uptrend. You have a break, and now you're looking for a new high. And so as you kind of watch prices, you ask yourself, what other opportunities could we get to ride this momentum that's moving up? Because we still have the separation between the 9 and 21 EMA. MACD is showing a little bit of a crossover here from bearish to bullish momentum. We have our new swing here off the 21 EMA as prices come up. First entry short by one tick below this signal bar. And as prices come up, if we get a tick below this signal bar, that would be a second entry short trigger. We don't get it below that bar. What about this bar? Not that bar. What about this bar? No, we're just continuing to find that second entry short trigger. There's a second entry short trigger in an uptrend as prices had a break moving to a new high. So people are trying to pick a top here. They see this bearish bar. They see enough room to the 21 EMA. They're going to try going short there. I'm going to mark this as an aggressive trade because we had a break move to a new high. But if you want to catch the stops of people that are trying to go short, you'll see prices immediately completely reverse, get you in that trade, and you'd be out for a scalp at the very least before prices then move down. And this is what happens on a continuous basis. People will try to pick tops, they go short, they get stopped out, we catch those stops, ride the momentum, and then prices go exactly where they thought they were going to go. Now, what's truly amazing about this strategy is you can have your entry order in place. And if prices leave without you, and let's just say prices continue to move back to the EMA, okay, great. You never got into that trade because you had your entry order one tick above the signal bar. But on that off chance that prices don't go down, they're going to go up instead, catching the stops, riding the momentum. You'd be out for that scalp. So now that this uptrend is played out, we're looking for prices. We want to see how prices are going to react at the EMA. We're anticipating for prices to push back down below the EMA and hold. As these bars print, notice what the MACD is doing. We just had a crossover. We just had all of this bullish momentum take place right here. And now we have a crossover of the MACD as prices transfer to more of a bearish momentum. You have a new high here. Prices come down up for a first entry long. Prices come down and up for a second entry long trigger. Prices are holding at the 21 EMA. Yes, you do get a little bit of overlapping bars here, a little bit of congestion, but you're also anticipating this 9 EMA to cross over this 21 EMA. MACD is showing bearish momentum. You could take a risk here going short on this failed second entry long, and you can catch those prices and write it down for at least a scalp. By this time though, it's 12:20. Again, I was done trading by this time. I had enough trades for the day. I was very happy and content with my 4-0. If you continue to stay a little bit, you're going to see a lot of choppiness, EMA flat. Not a fan of any of this, and prices are moving very slowly by this time. So, it's nice to see that a lot of you are taking advantage of this strategy and have been enjoying this strategy. I really enjoy seeing other people become successful with something like this. It's been very successful for me, and I'm really glad that you guys are able to be profitable off of it too. Now, it's still fairly early, but I've gotten a lot of questions asking about trading groups and potential Discord setups. And I think the answer to that is I want to start a Discord. I just want to make sure that I'm going about setting it up the right way. I want to be able to have a place where we can talk about strategy and people can bounce ideas off of each other and be able to spot things that maybe other people can't see. Because again, trading can be a very lonely activity, and it's nice being able to trade with the community. So I can't tell you guys exactly when, but in the near future, I do want to set up some sort of Discord where we can meet, discuss, ask questions, answer questions. People can be able to learn from each other. But that's going to be it for today's video. I really hope that you guys enjoyed today's video. And if you have any other questions, please leave a comment down below. I read every single comment. I try to respond to everyone, whether it's through YouTube, whether it's through Discord, Facebook. I really enjoy doing this. I think it's a lot of fun. And again, don't forget to like, subscribe, check out some of my other videos if you haven't seen them yet, and I'll see you tomorrow.